all of a sudden we've equated knowledgeability to wealth, which, by the way, I met really rich, dumb people and really smart people that haven't made money because they're early in their career for whatever reason. And the fact that we've just set this arbitrary standard in the US of who can invest in these things or not, and we've excluded the vast majority of the population from these type of opportunities is ridiculous.
Yep.
It really is. The amount of wealth creation that has happened in the private markets is astounding, and only very few people have been able to participate. Oh, and then you wonder why inequality is on the rise in the US since the global financial crisis. Like, well, guys, like, update the goddamn rules.
This episode is brought to you by the Chronicle protocol, a cost-efficient, transparent, and decentralized oracle. Chronicle has developed a next-generation oracle primitive called Scribe, which reduces oracle gas fees on L1s and L2s by over 60%. You'll hear more about Chronicle later in the show. This episode is brought to you by Toku. If you are planning to launch a token, already have a live token, are granting employees or contractors vesting token awards, or are just trying to figure out how to take care of taxable token events for your team, from easy to use token grant award templates through tracking vesting to managing tax withholdings, make it simple today with Toku.
I know there's so much variety, but like I usually gravitated to Granny Smith apples. I love Granny Smith apples. But now I've like tested and expanded my horizons. I've landed on Pink Lady.
Pink Ladies.
It's really nice.
That's fitting for you.
Pink, yeah. What do you mean it's fitting for me? What does that even mean?
That's how I know you're bored, is when you're testing apples.
Folks, I was like 3 days sitting in Berlin, like trying to not have anxiety over running this marathon. I was sick. And so I was like, all right, maybe I'll get, 10 apples a day cures like.
So tell us about the marathon. So you ran the Berlin Marathon.
Fantastic event. I was, people might remember when we recorded the podcast last Thursday, I was feeling sick. I woke up on Friday, had fever. I'm like, oh boy. And my flight was like super early. So I'm like, I might as well just go. Like everything's paid for. So I get on this plane. I don't even know if I'm going to run. And it was just really nice. Like I recovered surprisingly well, not 100%. I still like had, I'm still sick. I guess it's going around, but I ran it. It's third best time. I missed my PR by a minute and 56 seconds. So I ran 2:49:15, 2 hours, 49 minutes, 15 seconds. My fastest was London earlier this year. And yeah, man, it was fantastic. The course is amazing. It's one of the flattest, I think the flattest of the six majors. There's six major marathons. It's New York, Chicago, Boston, Tokyo, Berlin, and which one? Anyways.
You ran a 2:49. So 2:49 that's 169 minutes. There's what, 26 miles in a 26 miles. So 169 divided by 26 is 6.5. You ran a 6.5 minute mile. First 26 miles.
Yeah. And the nice thing about how I did it, like it was not my best time. It was the best execution because I ran a negative split, which means every incremental 10K, I ran faster. Like I increased the pace and I was feeling super strong. But I went in with zero expectation. I'm like, I just want to break sub 3, which is, considered pretty good time. And I did really well. So now I'm going to do New York in a month. I'm going to see you out there. So
yeah. How long do you train for a marathon like that?
Yeah, so that was the other thing. I got injured after London in April, and I didn't run. I counted the runs that I had on Strava, 10 runs. I cycled 99% of my training was in the bike. And of course, like the aerobic capacity, like my heart rate was much lower in this marathon than the other one. It was just like zone 2 training for anyone that cares about this stuff. Like there's just the incredible amount of zone 2 training you can do, and that set me up really well. But my biggest fear was like your condition doesn't translate from the bike to the run 1-to-1 because you're using different type of muscle groups and recruiting different types of like fast twitch load. Anyways, not to get too into the weeds, but it was like a big unknown for me how I would respond to a marathon. I know I can run it. I just didn't think that I would be able to run it as fast as that because I hadn't trained virtually anything. So now I know. It's great because the bike is super low impact, right? You can go on a 100-mile bike ride and then do it again the next day. You cannot do 2 marathons. I mean, the amount of impact that it has on your joints and your body is like, it takes a week to recover. Some people take more than a week. So yeah, this is something that I love. I just get so much, like the crowd, the people running. It's incredible, man. These things are just, there's like 30, 40,000 runners. What made it so important this time around is the world record was beat by the female, like the women's time was beat 2:11, which is crazy, 3 minutes less than the world record. And then Kipchoge, which is this guy from Kenya, he had broken the world record like 2:01. And it's always been this idea of like, can someone run a marathon sub 2 hours in a sanctioned race? And he did not break it, but everyone was speculating that he would this year. So, it will be broken in the next year or two. I think someone will run a sanctioned race sub 2 hours, which is insane.
Crazy, man. Crazy. I love that there are these records that people just think are unbreakable, and then they always get broken.
It really is just amazing to see that, like, how we set ourselves and we break these artificial barriers. But it's crazy what the human body can do.
Yeah, the 4-minute mile. Everyone thought that was an impossible human feat, and then Roger Bannister.
There we go.
Yeah. We got some housekeeping. First off, you get a haircut?
No. I don't.
All right. I thought you got a haircut.
No.
All right. That's the housekeeping. Pod over. Pod done.
Wait, speaking no. Speaking of haircuts, folks, Yano needs to shave his head. And I will stop coming and showing up until Yano commits to shaving his head. You decide when, man. Like, you're going to be in holiday pictures. Like, your hair can grow back if you shave like in the next episode. But if you wait further, like, you're going to have Thanksgiving and Christmas as well. Like, just if I were you, I would like do it pretty.
Be shaved at Das London. So Blockworks announced this week that we are moving Das to Das London. The original, for anyone who's been following. So Blockworks has 2 conference brands. One is Permissionless. Permissionless is like our huge event that we had a couple of weeks ago. DAS is our institutional buttoned up crypto conference. It's probably the only crypto event where people are still wearing a suit and a tie. We've hosted it. It's the first big conference we ever hosted back in 2019. We've hosted 7 digital asset summits in the past. This will be our 8th. We had the idea several months ago to go to Washington, D.C. So that's where DAS was originally supposed to be, March 2024. And after conversations with a bunch of the big crypto protocols and companies and funds, we realized that sending a bunch of protocols into the belly of the beast, DC, might not be the best idea in a very heated regulatory environment. So we're moving it to London. Super excited about that. I was telling you before we hit record, it's probably one of the best responses we've ever had to a conference. We've got a ton of inbounds from sponsors wanting to sponsor, big speakers, some big folks in like the UK government. Tickets already being bought. So we're super excited about DAS London. That is March 18th to 24th next year. Tickets are $4.99 right now. It's the cheapest we've ever priced DAS. Usually it's an institutional conference. Usually they're like $1,000, sometimes even more. So tickets will go up soon. That's one announcement.
It's like a 1-day event.
This is a 3-day event, actually.
Oh, wow.
Yeah, it's going to be bigger than we've ever had it. So this year there'll be about 1,200 people.
Nice.
Yeah.
That's great. I love London. I mean, I think it's just what's Sunak's has been really vocal about being pro crypto and being an innovation hub. And I mean, A16Z opened an office there. There's just so much connectivity between Europe, Asia, the rest of the world there. Like, London is probably the second biggest hub after New York, financial hub.
Yeah, London has quickly become this like a very hot crypto hub again. And I think when we talk to a lot of folks on the ground, right, innovation is thriving. You've got some new institutional investors flocking in. You've got regulators like the FCA that are taking this pragmatic approach to crypto oversight. You've got the PM. I mean, the PM has welcomed crypto with open arms. He's getting beers with crypto founders.
You want to hear a crazy story?
Yeah.
When I was this is like when Cosmos was launching and proof of stake was a thing. And so we at the time was running validators. And I wanted to get clarity. This is like staked and all these companies were popping up, Bison Trails. And we wanted to do our thing. And so we wanted to get clarity on how these things would get treated from a taxation perspective. Like the proof of stake alliance is something that I helped create with Evan, who ended up like just joining Bison Trails, and like trying to get how clarity from the IRS, how like staking rewards would be treated in the US. So that was a good initiative that came out of that. But we also wanted to get a clarity on like, how do you run a validator, and like, is it like money transmission? Like, if someone delegates to your validator in Cosmos or in Tezos, is quite different. So we just wanted to get clarity. So we reached out to the SEC, wanted to get a meeting with them. We actually ended up meeting with them in San Francisco, and the Crypto Czar shows up. It was like a pretty fascinating, at least understanding for me of how at the time there was this idea that the regulators didn't know much about crypto, needed education. That was not the case. Meaning they were very knowledgeable and they knew all the different players. They knew the nuances between. So that was like a pretty interesting experience. But it took a couple of months to get a meeting, and we didn't get clarity. Needless to say, we were in London at the time. We requested a meeting with the FCA. We got it like within like that same week, and to me, it was impressive. This was back in 2008, 19, and it was like a stark difference in the level of, hey, we want to welcome you. I know you have questions, and they gave us clarity actually very quickly.
Oh.
So it was fine. You run a validator, and I was like, wow, this is. It's just a very different tone and posture towards just we're trying to do the right thing. We just we want to understand if we could run a business. And if we couldn't run a business, then it was fine. Like we can change stuff. And if we can't change it, then we'll, at least we know. And it was very refreshing actually. The FCA. And I've heard the same from Avi was based there and I was doing a lot of work with them at the time. And, Rebecca was on the regulatory pod. They all, I think unequivocally, so many people have had very positive interactions with the regulators out there.
Yeah, agreed. Yeah. So we're excited about London. What were you doing, by the way? Were you running the staking?
Yeah, staking as a service.
Staking as a service.
It was called Eon. I did it with a few folks.
Was this because you have this gap on like your proverbial resume after Elysium, before Parify? What did you do in 2019? Was that what you were doing?
Yeah, exactly. So I had I had positions in these protocols, and so. I was like, oh, so how am I gonna, I want to stake. Because staking is so important, not just to get it's to secure the network, right? And I didn't feel comfortable using solutions out there that I didn't understand, I didn't know. And so I said, well, I might as well just build it. And that sentiment was shared by the team that we recruited. And so we were a team of 5. We kind of knew each other for just being in crypto for a long time. And we set out to build effectively a staking as a service company, for ourselves first and foremost, and then friends and other people reached out and said, hey, and so we said, okay, we can let's see if we can productize it. There's so many learnings from there. We ended up shutting it down, but of course, like there was other Staked ended up in Bison Trails and so many others ended up having great success. Probably the best thing to come out of that was understanding how sticky user behavior was in crypto. Like if you were not the first validator in the set, good luck trying to acquire users. Once they delegate, they don't want to switch validator. Even if you went out with lower fees, they don't care. And that was learning for me in Tezos of how hard it was to recruit and get delegations. Of course, it's a hugely lucrative model. We're just too early. I'll send you a link. There's a post out in my Substack that talked about how I thought all the different products, derivatives, you could do so, and we still haven't seen much of it. I guess the other thing that came out of it is that gave me a lot of conviction to invest in Lido, because the guys that started Lido had the best. They would win these competitions of Game of Stakes or Cosmos, and they just ran the best. They had the best team. Technically, I think they were the best. We're one of the best. And so I knew them from that experience, and they always kicked our ass. So I was like, this is a team that I want to back. I know they're technically competent, and Lido ended up being one of the best investments. But yeah, there's, I think now that Ethereum's online and you have proof of stake, the market's just grown so much. I mean, that stream of income is fantastic. I mean, then you can do so many different derivative products. I mean, we talked about it at Permissionless, right? At that dinner. There is still so much that you can build upon on this stream of income that you get from validating. And I think this could be really exciting. I think Lido is a great case study. Obviously, Staked was acquired, Bison Trail was acquired, and so these are they just spit out incredible amount of cash flow. Yeah.
What do you want to talk about this week? There was Coinbase. I think there's 2 things with Coinbase. They had this marketing campaign in DC. They brought a lot of folks to DC for Stand With Crypto. There was also Coinbase launched Perps, right? They launched, they got regulatory approval to enable retail Perps futures trading. So that's pretty exciting. There's Pudgy Penguins did this thing in Walmart. That was kind of
Can
cool.
you switch your camera a little bit so that we can? Come on, show us your Pudgy.
I got my Pudgy. I didn't go to Walmart, I will admit, but I got this little guy. It's cute little guy. Luca.
Is that a pumpkin? Is that like October themed?
Yeah, I don't know. Luca sent more swag. The Blockworks office. So Luca Nets came on the Blockworks on Empire.
Yeah.
And this is the guy who bought Pudgy Penguins. He didn't start it, but he bought it back in April of 2022, I think it was. And he came on the podcast. He's like, hey, do you want some swag? I was like, yeah, sure. So he sent probably like 6 huge boxes of Pudgy Penguin stuff to the Blockworks office. So we're hooked up. Anyways, we got that.
Lucas, I'm not in the Blockworks office, but
I got one for you. I got another one for you, but you got to come to New York.
That's
so when
cute.
you come here next month or in November.
All right. No, that's huge because, who do you think is buying this stuff in Walmart? I mean, because you can buy it in Amazon, right? You can buy it in other retailers as well. Like Walmart is not the first retailer. It has huge distribution.
Yeah, it's cool. I mean, we talked. I've kept in touch with Luca. Walmart originally was going to put it on like a kind of a row, basically. But what they actually got was the most coveted part of the store, which is the front of, I forget, there's a word for this.
I remember because we were investors in GoPro at one of the.
You know what I'm talking about? It's in the front of an aisle. It's a whole section. So it says like, adopt your friend, your forever friend. And it is tons and tons of Pudgies. And I think they're like $9 each. And it's really, really cool. I mean, they're available in 2,000 US Walmarts with 3 exclusive toys. Every time a Pudgy sells, holders get a royalty. I'm sure it's a tiny minuscule amount because they're only $9, but that could be good cash flow.
And does each of these physical items correspond to an NFT or not really?
I don't know that actually. I'm not entirely sure.
Yeah. Interesting.
Yeah. And then they have so each toy, here's your answer. Each toy comes with a QR code that unlocks digital traits which can be redeemed in their digital social experience, Pudgy World, which is built on ZK Sync. And when you're there, buyers can collect and connect with friends just from buying this toy. Now, who actually does that? Probably not your 9-year-old, son or daughter who's buying this Pudgy. They probably don't do that. But there's, I don't know, probably a world of 15-year-olds who do that. I mean, if you remember, do you remember Penguin World? I think it was called.
Yeah.
That little game online. So, I mean, it's kind of this again. So, and it was cool. They have these.
I remember Tamagotchi. I love Tamagotchi. Like your online friend, you have to feed it and all this.
Yeah, exactly. So I think it's pretty cool. I mean, they partnered with MeBits and DGods. So every toy comes with a random trait from a different NFT project.
Oh.
There's things from like
NFT composability,
physical composability.
There we go.
Yeah, I don't know. I think it's cool, especially at a time.
I would love the team to come on, after like 3-4 months of data to tell us like things that I'd love to understand exactly that, like who's buying it and all that data, like what's cohort, are they buying 1 or are they buying 10? Who's actually activating the online stuff and what's the overlap between who's buying it and who actually has an NFT? I just would love to there's so many analytics here because you're stitching the real world with crypto, and understanding kind of that activity would be hugely fascinating.
Yeah.
I think it's worth having an episode with them.
This is crazy. The actual Walmart account on Twitter, like just at Walmart, millions of followers, tweeted out an extra special welcome to Walmart, tweeted the penguin emoji, said shop the new Walmart exclusive Pudgy Penguins here. Pretty cool. Got to respect Luca for this.
And correct me here if I'm wrong. Like I don't remember that pod as well, but I think a lot of NFT projects have gotten caught up in promising this very pie in the sky roadmap and virtual worlds and yada yada yada. When I think of how many have delivered, it's basically none, except but I don't remember Pudgy Penguins being very vocal or even mentioning that at all. They were just like, these are cute.
I mean, when Luca bought them in 2022, he said, look, NFTs are basically all we're doing here is just creating IP houses. We are putting IP on the blockchain and doing it in innovative ways. And the way that you have to do that is by creating something that's super cute. We've got that already with Pudgies. Then creating a shit ton of impressions on social. So they have like 1 million followers on, I think it's TikTok or Instagram. And then innovating with retailers. And for anyone who's ever dealt with licensing, it is super hard to, get your product inside of Walmart. And respect.
No, it's really cool. Again, these are aesthetically what I think pleasing, cute things. Like I would, they're kind of nice. It's a nice penguin. I have a plushie thing collection here, mostly of Harry Potter, and then a penguin. My mom actually gave it to me.
I see your Lego set in the background.
Oh, yeah, I bought some more Harry. I mean, okay, folks, if anyone that works at Lego is listening to Empire, first of all, we're open to being sponsored by Lego because I buy Legos like crazy. And second of all, like, when are they going to issue NFTs? Like, the minute they issue NFTs, like, I'll just like go bankrupt because I'll spend everything. It's just like, it's amazing. I love Legos, and the price of Legos just keep going up. It's crazy. And the collaborations have done. Like, talk about a great brand, but they haven't done NFTs. Not yet. I'm waiting.
All right, let's talk Coinbase.
Let's do it.
So back in May, Coinbase announced Coinbase International, starting with they had the first product was institutional traders could trade via this API. They could trade BTC and ETH perps settled in USDC. And earlier this week, they got regulatory approval to enable retail perps trading. I think it'd be helpful. And I think they received approval from Bermuda's Monetary Authority, the BMA, to enable perp futures for non-US retail customers. So now retail can trade perps. Retail outside the US can trade perps with Coinbase. Huge development. Can you maybe give us a lay of the land of like, where do you trade perps today? What are perps? Like, just kind of set up this conversation and talk, and give me the high level on perps and crypto.
Yeah. So perps are one of those things that were uniquely developed in crypto. I think BitMEX was the first one to come out with a perpetual swap. And I guess for people that are, what is the closest thing in traditional finance, right? It is, think of it as it's very similar to a traditional futures contract, but it has a few differences, right? One, there's no expiry or settlement. Like, these are just constantly rolling, if you will. And perps mimic like a margin-based spot market. So that's why they kind of trade really close to spot, like to the index price. So if you have like an ETH perp, it usually or a BTC perp or whatever perp, it usually is very close to whatever the spot price is. What's really interesting is this idea of a funding mechanism. So you'll hear a lot of traders talk about the funding, like the perp funding is really high, really low, to understand how much of people are going long or short a particular asset. So just looking at funding mechanism is something that I observe in terms of how overextended are, it's just a metric for me to gauge indication. Like if, and the funding mechanism is used. So as more people go long something or short, the funding mechanism is dynamic and to really anchor and keep the perp swap close to the spot, right? Because you don't want it to deviate too much. And the funding mechanism is really that the funding rate is a mechanism that keeps the perp close to spot, right? Which is kind of different, right? Because the futures can trade the futures can deviate quite a lot from spot. And I think that's due to basis, right? But because you have a funding mechanism, these perps trade really close to spot. So far, so good, I guess.
Good.
Perps, I guess, you find them in different flavors. Pretty much every major exchange like OKX and BitMEX and Binance have perps. FTX, this was like, probably perps are one of those things that get used a lot in the exchanges. They're widely popular.
Tell me about the leverage on perps.
That's where I was going. There's three different things, of course. One is the perp references a particular index or a particular like coin, right? You have the funding rate, and then you have max leverage, right? And what's really interesting is perp contracts don't require traders to post 100% of collateral as margin, right? And because of that, you can trade with a ton of leverage, sometimes up to over 100x, which, kids don't play with fire, right? This is not an endorsement, but just beware. Like, it's possible. I'm just outlining what is possible here. And the margin, you have to post some margin. And of course, that can be denominated in Bitcoin and other cryptocurrencies. and it really allows traders to kind of speculate on the future value of the particular underlying index, if you will. So you could go long BTC or ETH perp with 33x leverage, right? And has no expiration, it just kind of rolls. Of course, the funding rate is the key there, right? If the funding rate's really high, you got to keep that, you got to keep monitoring that, because you got to, that basically eats into your profit, and you got to post more margin. So, and the other component, I guess, is perps can not, they, as I mentioned, they could be, inverse linear. They can have some sort of ratio to the price of a particular asset, right? And so you got to obviously understand how that works, and what is called like a multiplier, right? So yeah, I don't know if there's anything else that is worth noting here.
No, I think that's right. I mean, the important thing to understand here is that the global, so there's spot and there's derivatives, right? So spot crypto trading accounts for about 25% of the market. The global crypto derivatives market is about 3 times bigger than spot. I think roughly, I haven't looked at the numbers in a while, but I think it represents about 75% of crypto trading volume worldwide. So there's this really strong demand. And the way that a lot of perps are traded today is probably either on kind of maybe a shadier exchange, or in DeFi with like Quenta or DYDX. So actually Coinbase and actually Gemini both announced this week offshore perps within days of each other. So I think Antonio from DYDX, who's maybe obviously a little biased on this because he runs DYDX, but he also has a really good take because he runs one of the biggest perps platforms. Let me just share some of his thoughts. He said,
I just going to clarify one thing with people about funding rate, because I think it's important.
Yeah.
So when the funding rate is positive, longs are paying shorts. And when it's negative, shorts are paying longs, right? I mean, again, I think there's one or two exchanges that actually have the inverse, which is really confusing. That there's not like a particular standard across all exchanges, so you have to make sure that you understand kind of the funding rate mechanism. Usually, it's like 8 hours, where these things like funding occurs every 8 hours, right? So, kind of the funding rate is dynamic and is constantly changing based on how many, what's the ratio between people going long and short, right? And the payout of said, kind of so anyways, just I wanted to clarify that, but go ahead.
Yeah. So let me read you some of Antonio's thoughts, which I think were pretty summed it up pretty nicely. He said, look, so Coinbase shared that they did 5.5 billion in volume in Q2 from institutional perps. Not that big of a number, but that's institutions only. And he points out, he said, look, there's continuing theme from the collapse of FTX that there's now a lot of FUD on Binance, right? And we decided not to talk about some of those rumors in this podcast, but if you're on Twitter, you can probably see Adam Cochran and others are kind of calling out Binance for some things that they think are on the shady.
And by the way, I just recorded an episode with Tom and Brian Zur yesterday, and we went into detail.
You did go into this. Okay,
we went into some detail, yeah, but
Okay, and that'll be live here. So Coinbase has earned this reputation as being like the most trusted, most stable alternative to some of these maybe what folks would think of as kind of sketchier exchanges. And now that Coinbase is perps, the question is, do users care enough about safety to move over? And for some users, I think that'll matter, right? But Antonio's called this out, and I kind of agree with him. He said, I've been repeatedly surprised how little users care about safety over my years in crypto. For example, remember when Bitfinex got hacked, 2016? Everyone thought that they were done. A lot of people kept trading on them like nothing happened. So the biggest question is, will users want to move over? The other big question is, will Coinbase be able to iterate fast enough and be aggressive enough to compete in what is already a very competitive landscape for perps products, and in a market that has probably benefited from less regulation? Because with perps products, you have to be super aggressive. Listings, max leverage, features, chart trading, order types, liquidity, ease of onboarding. Can Coinbase be as aggressive trying to be this very regulated company? So Antonio's take was that they take probably 5 to 10% of the derivatives market share in a year or two. We'll see. They're very late to the centralized exchange derivatives game, but I don't know. We'll see.
I mean, look, it's huge, right? Because there's clearly a ton of demand. I think it's one of those things where it's a novel product. It's actually pretty sweet, and so I would think that this is something that is going to get a lot of traction within the existing clientele of Coinbase. Because, a lot of institutions can't access these other exchanges and have perps. And so, as Coinbase gets more market share, I think, regardless of whether all these allegations or case, I think by and large, Coinbase and Kraken, I think, are two of the exchanges that will probably continue to gain more market share.
Yeah.
Coinbase just got a license in Spain. It's gone out and gotten more and more licenses overseas to serve, retail and institutional, right? And it has a whole suite of products. And I think this is a good extension of that in terms of something that clearly has a ton of demand and is a huge profit maker for so many of the other exchanges, right? This is pretty key, I think.
Yeah. So the other interesting Coinbase thing from this week was they brought a lot of folks to DC. They brought a lot of people into DC for this Stand with Crypto movement. And Gary Gensler. So here's actually Kevin Owocki kind of laid out what they did. So the first session of the day was they brought all these folks in from, I think it was 50 crypto or 40 crypto founders. I think it was 40 crypto founders. They brought them to DC from 15 different states that are kind of key states, right? And they did all these cool marketing campaigns. They had these cans that said like "Wake up." 52 million Americans.
There were cold brew cans, which
they were cold brew.
Anyone that knows is another potential sponsor. Cold brew. If anyone wants to sponsor us, I love La Colombe. Best cold brew in the market, by the way. Not endorsement, but
look at this. This is.
But the nutritional
facts. Yeah,
that was amazing.
Yeah, the nutritional facts. 87% of Americans want to update the financial system. 20% of American adults who own crypto or own crypto. 22% of Democrats, 18% of Republicans. Jobs, crypto is set to create by 2030, 4 million jobs. Fortune 100 companies that have crypto initiatives, 52%. Fortune 100 companies that consider crypto a competitive advantage, 64%. Savings of ACH payments, I can't see that word, but something. Got resolved by crypto, 2.67
Savings
billion.
of ACH payments ran on crypto rails, 2.67 billion. Countries currently exploring digital currencies, 130. Crypto owners with an income of greater than 100K, 75%.
No, of less than 100K.
Less than 100K. Americans satisfied with the current financial system, 9%. It's time to update the system and a QR code, which I don't know where that goes, but probably Stand with Crypto.
Anyways, they had that. They also had this big money truck, like a Brinks truck, where you deliver cash. Like the future of money doesn't move on a money truck. Fucking genius.
Brinks
really great campaign. So anyways, first session of the day, they brought folks in to watch the Gary Gensler Congressional oversight hearing live, which is really cool to have these founders and kind of sitting right behind him, and people were putting the like Stand with Crypto little sign right behind him. They got to meet,
reminiscent of like the what was it, the Bitcoin sign way like years ago.
Exactly. I like that guy. I've met that guy a couple times actually.
He got fired, right, or something.
Yeah, exactly. That's okay. So anyway, I thought it was a super successful campaign by Coinbase. I was watching CNBC and Bloomberg throughout the day to see if it would make its way to kind of mainstream, and it did not. So that was probably, I think we thought it was very successful, but maybe just on crypto Twitter. But it did feel like kind of the best coordination of policy and regulatory efforts, bringing founders in from all across crypto. Best in DC for a long time. So yeah, just big shout out to Coinbase for kind of unifying the industry and making this very memeable content with the cans and the trucks and all that kind of stuff.
Yeah, pretty awesome to see.
This episode is brought to you by Chronicle Protocol, the best on-chain source for cost-efficient, verifiable data. For anyone who listens to Empire a lot, you know that we talk a lot about MakerDAO. Well, Chronicle Protocol is this novel Oracle solution that has exclusively secured over 10 billion in assets for Maker and its ecosystem since 2017. And for the first time ever, super excited to share here that Chronicle's Oracle service is now publicly available for anyone to use. Compared to using other Oracle services, Chronicle offers a 60% reduction in gas fees. They have an unparalleled level of transparency at Chronicle. They offer a dashboard that allows anyone to track the genesis and trajectory of the data it provides, marking this milestone in on-chain data availability. Chronicle is endorsed by a network of the most revered validators, including Etherscan, Infura, Gitcoin, DYDX, and MakerDAO. It is time for a paradigm shift in Oracle development, a future where Data is verifiable, operational costs are contained, and the possibilities are immense. You can learn more about Chronicle at chroniclelabs.org. That is chroniclelabs.org. This episode is brought to you by Toku. Toku makes implementing global token compensation and incentive awards simple. With Toku, you get unmatched tax and legal support to grant and administer your global team's tokens. From easy-to-use token grant award templates through token vesting to managing tax withholdings, Toku understands every grant structure. Token purchase agreements, restricted token awards, restricted token units, token options, token appreciation rights, and even phantom tokens. For legal, finance, and HR teams, it is a huge, complex task to have to comply with global regulations around compensating people with tokens, not to mention the payroll, tax obligations, tax reporting in every country that you employ someone. It is difficult, time-consuming, manual, and costly, and it is drawing more and more attention from regulators and governments. Toku makes this simple for leading teams across the space. Protocol Labs, DYDX Foundation, Mina Foundation, Hedera, Gnosis, Safe, Gitcoin, and a lot more. Reach out to Toku at toku.com/empire or click the link in the description.
Any highlights on the congressional hearing? I saw some clips that
I
were,
think,
yeah.
Tom Emmer had some good clips. Richie Torres had good clips. The takeaway, so we had some folks who were covering it pretty closely. The big takeaway is that both sides of the aisle are now joining in, right? There's Tom Emmer, who's Republican, Richie Torres, Democrat, Mike Flood, Republican from Nebraska, Wiley Nickel, Democrat from North Carolina. There's now a bipartisan group of representatives that wants Gensler to, as they say, act for the SEC's failure to approve a spot Bitcoin ETF.
Mhm.
And a lot of them called him out, right? So this
Yeah,
is this is like the anti-Gensler movement. So Casey Wagner at Blockworks wrote this article. The title is "The Anti-Gensler Movement is Picking Up Steam on Both Sides of the
yeah.
Aisle."
What's interesting is because sometimes I think it was one of the first where crypto Twitter said, "Wow, it was they really grilled him," and and then I spoke with other folks, and they were like, "No, you know what? Like he kind of like danced around it brilliantly," and I was like, "Okay, that's interesting," because most people seem to think that he was really cornered and you know and he didn't have good answers to a lot of the stuff, particularly his ETH security, like he wouldn't answer. I wonder what the feedback is now, and I think we ought to have an update on the regulatory pod soon with Rebecca, Jake, and other folks, right? To talk about this and other things. But one thing that I have found interesting was there's been a lot like the popularity of Gensler is also not really positive amongst private equity and hedge funds because he's been trying to introduce like just new, more probably what they seem to think onerous kind of rules and for the private equity industry, and it's got a huge backlash. And
Well,
he's
not only that, the rules that they've placed on late stage private or on public companies make it really tough for late stage private companies to go public.
yes,
So what you're seeing is more and more companies staying private for a couple of reasons. It's bad IPO market, but
mm,
also it's the costs of being a public company go up every single year,
right,
which incentivizes founders to stay private for longer.
yes. So, anyways, it's just interesting to see that sometimes we look around and say, "Hey, are we crazy? Like, are we missing something?" It just has felt that we're not getting answers, and but it was just interesting to observe that the reaction and of other industries towards Gary has not been as positive, right? And so clearly that also weighs into all this discussion.
Yeah. Um, we want to talk about Uniswap. There's some foundations like Uniswap and Optimism asking for money. Curious to get your take on that. We could also talk about Block Native shut down their
Yep.
relay.
Yep. Yep.
Where do you want to go? We could talk about these AI valuations.
That's always fun. I mean, yeah. Why don't we talk about that as a break from crypto, folks?
Yeah.
What's going on in AI land? Just a 1 minute.
You see the secondary for AI, for open AI.
I did not
Yeah.
participate in that.
glad you didn't. So OpenAI is in talks to sell some secondary valued at 80 to 90 billion.
That's roughly 40% of Ethereum's market cap. right? Give or take.
Yeah. What do you think about this?
What? Oh,
About
that
the 80 to 90 billion dollar secondary?
probably local top. Like Anthropic also like got like was it Amazon committed to investing over
$4
4
billion.
billion, which is
Yeah.
kind of like a
Which I actually do use Anthropic every day at this point. I will say
really.
I like
I mean,
Anthropic
to
a
be
lot.
fair, it's like getting AWS credits. So like it was like yeah, we'll give you 4 million, but you have to use AWS. So it's kind of like a the structure of the deal made a lot of sense, I think, for Amazon. So, but yeah, look, I've been obviously paying attention to AI. I just invested in a fund called Mythos, like which is super early stage. They were very disciplined with size, and I think he has a really good network and whatnot. And um, like I want to have exposure to AI in my portfolio. I'm not going to be the one to do it. I
Did
wonder
you say
though.
Mythos?
Mythos Ventures.
Mythos?
Mythos Ventures.
Do you know who ran a fund called Mythos? Ryan Sean Adams at Bankless. Before
Oh,
pre-Bankless, his fund was called Mythos Capital.
oh, right. Yeah, I guess. Yeah, popular names, I guess. So there's a great podcast on NVIDIA and Taiwan Semiconductors, two actually. It's by Acquired. So this is just pretty illuminating. The NVIDIA one in particular, there's two actually. The most recent one is really interesting to understand like CapEx and why now, like why did we reach kind of this huge inflection point where everything was just out of the blue talking about AI and NVIDIA in particular. But I don't know. Like it's really interesting because I wonder how much of this is going to be open source and how much is going to be monetizable, right? And I also have questions around product. Like I think there will be a lag between the amount of, and we saw this in crypto, the amount of companies that are going out and saying, you search, public filings on Edgar SEC and like Control F AI and every like. At this point, every company's like talking about AI in their filings because if they don't, then the market's going to
Yeah.
punish them. I do think there's gonna be a lag between like I just wonder like what's the best way to understand how companies are productizing AI?
Do you
And what
see?
kind of
So I'll tell you. I mean, did you see the Facebook? Did you see the Facebook announcement with their? Remember Google Glasses?
yes.
So Facebook just did a partnership with Ray-Ban to
Okay.
to launch Facebook or Meta glasses, and they actually don't look that bad.
Huh.
I always thought
I
Snapchat was
was
going to be the first to market with a pair of glasses that like really
yeah.
integrated AI. These, yeah, I mean they look like Ray-Bans, but they're like full
They
all
have
the
like
AI
the
features of
sure.
Meta. You can like you can be
Yeah.
walking down the
I mean
street.
Whoop recently announced and Whoop like this wearable to track
Yeah,
like
yeah.
a bunch of things like announced like a integration with OpenAI. So yeah, I understand that, but I do think that there's going to be a lag between when companies do the spend and what they actually productize.
Mm,
Um, Some might move faster than others, but that might be the disillusionment is what I'm trying to say. Where
mm.
people think, wow, it's really going to transform the business, it's going to streamline, it's going to increase your margin, you're going to yada yada yada. But in reality, I think there will be really positive and successful implementations of that, and there will be not so positive that will take longer than what the market thinks or expects. And that's where we might see this disillusionment where it's like, okay, like Magic Leap is an example, right? A different example, like different category, obviously, like augmented reality and VR. But these things typically take longer, and I think the market is pricing it to a point of perfection where the expectation on the impact and the timing of said impact is just priced to perfection. And invariably, when that happens, there's disillusionment. So
Do you personally use any of this stuff?
I pretty much stopped using Google and just use like ChatGPT.
Yeah. Yeah, I pretty much do the same. It's crazy. The new stuff. So I have the ChatGPT app. You can
Yep.
go to settings and then go to new features and then turn on voice and you can pick the voice. It is the best like so I asked it a question and then it responded in this in the voice and it was like a flawless response
In your voice.
no, like in another person's voice, but
Oh,
it
I
didn't
see.
sound like a, robot voice. It truly sounded
Yeah.
like if you put this behind a Zoom with no camera on it, I would have thought it was a person.
Yeah.
And it
Deep fakes.
responded instantly to this kind of tough question I asked it. And if you should use the data feature of it too, of ChatGPT. You can
Mhm.
upload a data set. It figures out what the data is, it cleans it, it denoises the data, it manipulates the data into like how it should be structured, and then it represents the data visually and creates something better than you did IB, like then you're an
Glorified
IB.
investment banking analyst.
Yeah, exactly. Then this IB analyst could do
Great.
it. Would take someone in IB
Yeah.
like 20 hours to do this.
Yeah.
It
Yeah.
can do it in 3 seconds.
Yeah.
So
No,
it's
look, two
it's
things.
nuts.
I listen to anything and everything that Stan Druckenmiller says, and he was long AI like a year ago, and like long Nvidia, and I just like a monkey just did the same. Um, and I think the impact's going to be obviously lasting and transformative. But just question, like, I think there will be obviously troughs of local tops and highs, local
Yeah.
tops and but the other thing that I saw recently is that it is now able, like ChatGPT is now able to search the internet. Like it was constrained, the
Yes.
data set was constrained to
It's
like
not constrained
three.
until September 2021. It is now updates from websites in real time, which
That's
is really
fascinating,
cool.
which is really actually really really useful.
Yeah. You can
That was
also
one
have
of
it
the
write code. So I saw this video online. I haven't done this yet, but someone wrote like, "Hey, take emails,
yeah.
put them in here, do the
Oh
age, take a picture of that," and it was just a whiteboarded
yeah,
thing, and it was like, "Turn
yeah,
this into code,"
yeah.
and
There's
it
like a guy who's like, this is the front page. This is how one would look. Took a picture and then boom.
right. Or you can just screenshot a website, put it into ChatGPT, and be like, "Create the code for this front end."
I saw the one that says two ones are really funny. One is like kids will never do homework again, and it was like they took a screenshot of the homework, and it was
I
like
s-
it was
I saw that.
math, and they were like, yeah, these are the answers. And
Yeah, I
then the
saw
other
that.
one's like this guy took a picture of like like parking signs are
Oh, I
incredibly
saw that
confusing.
too. Yeah,
And he
yeah.
was like, I will never get a parking violation ever again because it's like, hey, ChatGPT, can I park here? And it's like, and it was like six different like things, and you're like, what the hell? It was so confusing. And then of course it says yes, you can park here for an hour. It's like perfect. Thank you.
Crazy,
That's great.
crazy.
Anyways,
Um, the valuations, I think so OpenAI is this unique, like it's very one-off thing, but I think there's a lot of AI companies raising at like 100, you know, $500 billion right now. I'm sure you've seen some of these, and
yeah.
they're doing like a million of revenue. The thing I would caution is I'm sure you're seeing some of these secondaries that are going on. The secondaries are getting worse and worse and worse in crypto right now. There is a company that did,
And general tech too.
yeah, they raised this company I just saw this week raised it. Trying not, I don't want to give them away, but they raised it over a billion. They are not raising it. Their revenue is $3 million
They're
right now.
running out of cash because they're
Yeah,
2 or 3 years, they're 2.5 years into doing the last raise, which is where most companies are right now. And they have less than 12 months of runway. They're figuring out how to keep the
right.
lights on.
So they raised it. They raised it, at over a billion. They're doing 3 to 4 million in revenue right now. It sounds like it's closer to 3 million. The 100x multiple, 100x revenue multiple would be 300 million. So the to get to the last valuation, you'd have to raise it like a 300 to 400x revenue multiple. Obviously, that can't happen. So to not die because they're not close to profitability, or they either have to cut like 80% of their team, get to profitability, or they have to go raise more money. But if they do that, best case they raise a down round. Worst case they have to do a whole total recap. Just a nightmare situation.
Yeah, look, I mean, this is probably when we think about the things that I caution founders to do is like be careful with raising a step function like round that is just taking the highest valuation because down the road you're going to have issues most likely. Like growing into that valuation is going to be tough. The options that you issue to your employees are going to be priced at that last round, and invariably if you don't live up to that expectation, probabilistically you won't, then you're going to have to do a massive recap, cram everyone down, your employee, and then how do you go from there? Like the morale is just going to suck. Like people can be like, wait a minute, I got issued options at a billion, and now this thing's worth 30 million. Seriously,
Hmm.
like they're doing 3 million in revenue. God, I mean that's like 30 million. Like that's, are they profitable? Maybe they're cranking like a million and whatever EBITDA. Again, you shouldn't price these things necessarily on profitability, but like this was like what people were saying. You shouldn't price it on profitability. It's a huge market, yada yada. But now rates are where they are. Like, yeah, profitability is front and center. What are unit economics? What's your retention? Like these are things that like it was I mean, talking about the things that are so difficult, it's like imagine if you're a fund, you love that product. You think that company's worth at that time probably like 200 million, maybe. And there comes a fund and gives them $1 billion valuation. Like And that happens over and over and over again for 6 years. Like, I would like it's really tough to hold the line and not just say, I need to just I need to dance. Everyone's doing it.
Yep.
And so like that's where I think those type of investors are going to be heavily rewarded right now because those type same folks that love the company, like the team, passed it a billion, now might have the capital to give it to them and end up owning a huge chunk of the company at much more favorable, realistic terms.
Yeah.
But it's
Let
tough.
me
It's
ask
really tough.
Let me ask you about these secondary deals that are or I guess not secondary deals, these token deals, these locked token deals that are happening from Foundation. So Optimism,
Mm.
this might have been last week, but Optimism,
They sold a couple of 100 million or so.
I think it was 117 million.
Yeah.
I don't know the facts on this, but what I heard is it was roughly a 30% discount, 2-year lockup or 2-year vest.
Seems about
Um,
right.
I think 7 funds took it down. It sounded like Andreessen probably took down about half of it. It's not fact. This is what I heard
Yeah.
in some group chats. What how do you think about doing those? Do you do those deals? Do you skip on all those deals? Do you just case by case?
Well, as it relates to lock tokens, no, but at foundation tokens, yeah. I mean, I think it makes a whole lot of sense at the right terms. I think when you think about why I would trade at a discount, it's for two reasons, right? Or one particularly, it's the marketability of it. Like the liquidity discount needs to be there, and usually is at least 20%. Depends on the lockup, but it has to be at
Mhm.
least a year lockup. And I think it was at least 15-20%. And I've done a number of those deals. Look, it makes sense, right? I mean, if the foundation goes out and sells in the open market, only the Ethereum Foundation is at that position where ETH is just that grown in that level of size. And there's big constituent holders of Ethereum, like Joe Lubin Consensus is a bunch, and like
Right.
the Ethereum Foundation. There's different very big parties that hold a lot of ETH, and so the Ethereum Foundation can just go out and sell, in Coinbase. But for every other more fragile team, like I think the signaling is stronger if you place those tokens in hands of investors that are committing to holding and believe in long term. I don't know if A16C was part of it, but they were investors in the earlier rounds of Optimism. For them, it just makes more sense to
Yeah.
acquire a position. The signaling is super strong. There's ways to go about it. I think this is where people get critical. It's like, wait a minute, why didn't you offer this deal to retail? And the challenges associated with that. Unfortunately, the investor accreditation rule is a short of it, and it
Can't do it.
sucks. And it really sucks. Like, why shouldn't retail that's been an investor in Optimism, believes it, understands it technically, can't participate in this type of deal? And lawyers will like shoot it down because of the lack of clarity in investor accreditation. So you wonder, like that's harm, right? Like all of a sudden we've equated knowledgeability to wealth, which by the way, I met really rich dumb people and really smart people that haven't made money because they're early in their career for whatever reason. And the fact that we've just set this arbitrary standard in the US of who can invest in these things or not, and we've excluded the vast majority of the population from these type of opportunities is ridiculous.
Yep.
It really is. The amount of wealth creation that has happened in the private markets is astounding, and only very few people have been able to participate. Oh, and then you wonder why inequality is on the rise in the US since the global financial crisis. Like, well, guys, like update the goddamn rules. Have sophistication tests, knowledgeability tests. But no, we can't do that. But these deals make a lot of sense. Like Lido did a number of these.
Yeah.
And the fund, like Paradigm, did it, and they came and they posted on the blog, and the community like responded, and they had to prove their worth, and then the terms were very openly negotiated and then voted on upon Lido holders.
Yeah.
And then another fund came, and they were rejected, right?
Yep.
No name fund, and so it's happening in the open. I think is really interesting. So yeah, I'm a generally a big fan of doing these things in an orderly manner. The team needs to get runway, and I understand why they would want to do it, right? To secure runway. Founders
Right.
selling and foundation selling for the right reasons and the right amount makes a lot of sense. I have no problems with that. A lot of people are really critical of founders selling. I'm like, no, of course, like 99% of their net worth is tied in this company they've been working on for so many years. Do you think they're going to be less or more distracted if they diversify? Like, it's stressful, right? So I'm a big believer in
I think
selling.
I agree with that.
There's
I
a
think
fine line. When a founder comes in and says, I'm
there's a
going to sell
fine line.
90% of my stack, you're like, okay,
There's a
let's
danger. The most dangerous place for a founder to be is someone to have a little bit of financial comfort, but not too much financial comfort. So what I mean by that is I've seen some founders take 100 million in secondary, right? The founder of Hopin, there's a crypto company founder who they raised a lot. Founder took 100 million in secondary. That is too much secondary. That in my mind really disincentivizes you. The other side of that spectrum is a founder who's never taken secondary, has no money, and is super stressed about money every day. You can't take the risks you need to take to kind of stay on the cutting edge of your company. So I think the most dangerous place for a founder to be is in a good way is having a little bit of financial cushion, but yeah, still
yeah,
all eyes
some
on the
amount,
company.
some
Yeah.
amount.
Yeah.
I've done this a number of times, and I think it's quite healthy. Like,
Yeah.
I like that. I have, you know, so like Vitalik, like look at historically, Vitalik has sold a bunch. He sold at 6. He sold at 18. He sold at 18, and everyone freaked out. The token went down to 6 again, and that was, it's like, guys, like,
Remember when ETH dropped 10% because we thought Vitalik got hit by a car?
oh no, I forgot about that. But
You
yeah,
remember that?
fragile time. I mean, I remember when Vitalik sold. He sold a bunch of his stack at, I think it was $18, went down all the way to 9. I'm like, guys, what's wrong? I mean, he sold like X%. Like,
Yeah.
it's kind of normal. But
Yeah.
in bear markets, people just want a reason to the market skews negative, and it just reads everything as interprets everything that comes out as negative, and so it's like, okay,
Yeah.
that you're in a bear market when that happens, right?
So we have 2 pods coming up. I think this is a good place to wrap the 2 pods. We've got you, Tommy, and Ryan. That'll
Yes.
be fun.
Yeah, that was really fun.
We had 2 guys from Blockchain Capital, Spencer Bogart and Alex, two the GPs of Blockchain Capital. So yeah, really excited for that conversation. It was a pretty good one. And yeah, Monday and Tuesday, those both drop.
Yeah, really excited for those. Drop us a comment. As people have noticed, I'm more active on the comments on YouTube. So drop us a comment if you like those conversations.
I like when people tweeted us.
Yeah, that's
I like
true.
it
I mean,
on
obviously,
the Tweeter.
I'm more active on Twitter.
No one's
So
nice on YouTube. Everyone's a dick to me on YouTube.
most
I went on
well,
this podcast called MFM, My First Million.
oh yeah.
It's like one of the biggest podcasts in the world right now, and I went on it, and these comments are just
Oh
ripping
God,
me
lovely.
right now.
Nice.
Oh,
Well, I will say, if you shave your head, I think there would be interesting comments. I'm
get
not
out of
gonna.
here.
First of all, and well, actually, one other thing. You won't say it, but I will. I noticed that you guys were one on Blockworks did like top innovative. Like, there's this awards of the most
Oh yeah, this was
innovative
cool.
companies. Like, can you just?
LinkedIn publishes for the last 7 years. LinkedIn has published their top 50 U.S. startups list, and all these great companies have been on it, like Brex. And this year, the number 1 was Ramp. If you know Ramp, number 2 was Liquid Death. It's a really fun list, and I always read it. So yesterday, I'm sitting in the office,
You
and
had
we
no
have
idea.
I no idea. A lot of these lists you have to pay for, or like
Yeah.
you ever
Like
see
the
someone on
Forbes,
like
Forbes
Inc.
30 under 30 is like,
500.
you get a nod from like the venture partner and one of his analysts is like, hey, can you name him 30 under
So
30?
yeah, Forbes. We also got Forbes 30 under 30. Didn't have to pay, but like there's definitely like a hey, who do you know type of game. There's all
Yeah.
these other lists like Cranes and Inc. 500. You have to pay money to be on those lists. And so LinkedIn, you don't have. No one ever reached out to us. I was sitting in the
Mhm.
office, and we have this new reporter, Jack, Dow DeFi reporter, and he's like, hey, this is super cool. We're on LinkedIn's 31st best US startup to work at. And I was like, seems like a scam. Like, see, it's probably a fake list. He's like, no, I'm reading it. It's on LinkedIn.com. Sure enough. Yeah, Blockworks sitting at number 31. It's pretty cool.
Nice, dude. Congrats.
Yeah. Thanks, brother.
Good stuff. I don't check LinkedIn. I haven't checked in a while, but I saw it on Twitter. So
Yeah, it was cool. Yeah. This year, it's their top LinkedIn news story. This year's 50 startups to watch. You click it, scroll down, and they called us a software development firm. So not sure they know what we do, but that's okay.
hey, maybe they're giving you credit for the research analytics.
Yeah, exactly.
platform.
Exactly. We have some good software here. So
Yeah.
sweet, man.
Awesome. Any books, stuff that you're watching?
I'm
No?
reading the new Elon book.
Oh, the
The
Isaacson.
the Walter Isaacson Elon book.
Yeah. It's nominated as one of the best books. And Financial Times has like probably the best like top books of the year
Yeah.
kind of awards, and that's one of them, I guess.
I see Walter Isaacson. I'm a simple man. Walter Isaacson puts out a biography. I read the book. So
God.
yeah, simple man. Leonardo, Code
Yeah.
Breaker, Einstein, The
Steve Jobs.
Innovators, Steve Jobs. Yeah, those are all great. What about you?
Indeed. Nothing. I'm out of content,
Nice.
guys. I need content. Again, this acquired podcast, I've been going through all of them.
I've
LVMH,
had some deep like acquired podcast
really
dives.
good.
Yeah.
LVMH, Nvidia, Costco, Taylor Swift. I want to listen to next.
The NFL was a good one too.
NFL is on the list
NFL's a good
too.
one. Yeah.
Yeah, no, it's a really nice discovery, and I really have enjoyed
You know, so
listening.
I've talked to one of those guys a couple times just on Twitter DMs. They record like 10 hours of content and drill it down for a 4-hour podcast, and they don't talk to each other before the podcast. So like they will be
Wow.
like, we're gonna
But
record
they
a
do
Nike episode.
extensive research. I mean, I think this
They'll be like,
guy's
we're gonna do a Nike episode. They'll be like, great, like see you in a month for this episode. I mean, they talk a little bit, but they don't talk about their research at all. So it's brand new. So they'll get on the Nike episode. They'll be like, yeah, I read this thing, and the other person's like, oh my god, I didn't know that, or oh my god, I read the exact same thing. That's so cool. Anyways, I
They
love it.
surface a lot of like the LVMH one is fascinating. I had very little understanding of how that came together, and the NVIDIA one was excellent. That's where I started, and I was like, okay, really thorough, really good.
Yeah.
Yeah. So, anyways, that's what I'm doing.
Cool, man.
And running, of course.
That's the pod.
That's the
wrap.
pod.
That's
That's
the
it.
pod.
Under an hour. So, folks, thanks for listening. As always, we will see you here next week.
See you on Monday and see you on Tuesday. Back to backs.
Back.
Have a good weekend, folks.
I'm doing my homework. You're keeping me busy. Thank you.